Okay, gonna do a couple of ETF videos for this Monday, and then we get into the trading week again Tuesday. So let's just go through them. I've gone through my ETF watch list, which has 45 items. I've plucked out the 20 that seem most intriguing, and I've busted those 20 into two perfectly even groups of 10. So let's do the first 10. We begin with the diamonds, and couple of things going on here. First, the diamonds got very, very close late in July to a new lifetime high. And they also did the tiniest bit of damage on the 24th and 25th of August to their trend line, which is a teeny tiny itty bitty feather in the bearish cap. And we went zipping up to this resistance zone. What I, of course, would love to see would be a resumption of the downtrend and a honest-to-goodness failure of that trend line, a close below the trend line. EWZ, this is Brazil. And even though commodities and oil in particular are getting stronger and stronger, I still do believe long-term, because this is a slow mover, a year from now, I think this could be substantially lower. You can see the long-term trend here. It tends to form these patterns over a great period of time before finally succumbing. And this latest one has been banging around for about 15 months now. Actually, I beg your pardon, much more than that, excuse me. Like 40 months, actually, in this enormous thing. So a very slow mover, but I think that aiming lower for that. Miners continue to be in trouble. Here's GDX. Here's the trend line quite plainly broken. And it peaked back here on May 4 and has since then been engaged in a series of lower highs and lower lows. And as I said, failure of this trend line. GDXJ, the junior miners, same story. Broadly downtrending for years and also failed its intermediate term trend line and may well complete a topping pattern like so, everything above that horizontal. IEFA is a global ETF except for North America. And you can see over the course of time here a whole series of tops. The most recent, which was this one, which was followed by the glorious bear market of 2022. Since then, it undid the entirety of the bear market and then some. It actually pushed its way back into this pink zone here. Although strictly speaking, if you considered a level more like this to be the actual top, then it was a little better behaved. Because as you can see, I'm just sort of like thinking and drawing in real time here. This dash line constitutes a nice base for this top. So we mushed our way back into that late in July and then fell hard. So in that sense, the top held. And over the past number of days here, had a bounce, but September, historically the weakest month of the year. If we can get some selling going on Tuesday, that could really start to accelerate things to the downside. IWM, the small caps. This one has been range bound for about a year and a half. Actually, more than that, more like almost about 20 months or so. So these three Fibonacci retracements have bound all the trading activity for that tremendous amount of time. And we're kind of on the high side of that right now. The most freaked out I got for years actually was back at the end of July. It just really seemed all hope was lost because this was so close to a breakout. But thank God it failed and plunged back down. So this really badly neuters the power of this pattern. And I've got a funny feeling that this is probably about all she wrote on this counter trend rally. IYR, real estate. This has been pretty much falling down since late 2021, but it's been getting kind of stubborn. It had been in this steady series like down, up, down, up, down, up, down. And this is when it kind of changed because Yellen got involved in the billionaire bankers bailout with her cute little BTFP program, over $1/10 trillion for her banking friends. And that stopped the steady series of lower highs and lower lows. It aborted that, which I wish Yellen had been, but I digress. So since then, we've actually gone into this uptrend of higher lows, but still lower highs. So more of a triangle really going on here. So this red and black line here, these two horizontals, very firm resistance. And what, of course, I want to see is a failure of this particular horizontal that I'm pointing at right there. KBE, the bank's always important, terribly important. Here's the massive top there. And the bullish base down here, much tinier. And zooming in even more, here's a teeny weeny little top like so, with the price gap right there. So we do not want to exceed that particular level. So if we can not exceed that, that would be fine. That gives us the prospect for really drilling down into this zone right here, because we did some damage already. There was the bullish base. We did penetrate that some before pushing back higher. So the damage helps. This one hardly anybody ever looks at. I think it's terribly important. This corporate bonds LQD. Look what's going on here. Here's the gargantuan top here. Broad, relentless bear market. And more recently, this. And a failure of this level at 103.31 would be quite potent in terms of like beating the bulls in the face again. And this is our 10th one, I think. In a similar note, MUB, the municipal bonds. And here, we've got this huge top, which we pushed back up against. We peaked on the counter trend incredibly back in mid-April. And since then, we've been hammering out what could constitute another important top. So we need to fail the levels that we had seen early in March to finish that. And even better, it sets up the possibility of a failure of this lifetime trend line, which would be, gosh, so cool. But we'll cross that bridge if and when we get to it. That's it for these 10.